Most people don't realize it, but right now they're on the edge of a financial disaster. And the worst part, they don't see it coming. We've seen this happening to expats over and over again. And today we're going to show exactly how to avoid it, how to see that before it's too late. We're talking about managing limited companies and call Italy your own. We are talking about something very specific, something that many international entrepreneurs, digital nomads, and expats overlook when they move to Italy. It's about your foreign company. It could be a US LLC, a UK limited company, and how Italy looks at it for tax purposes. You might think, well, it's a foreign company, so it's taxed in America, in a foreign country. But my friends, this is where the trouble begins. Let's meet Sara, okay? Let's pick an example. Sara, she is an American consultant, software engineer who moved to Florence some years ago. She absolutely loves Italy. And before moving, she decided to set up as one single member LLC in the United States to manage her consulting services for a few clients back in the States. All our clients are in the US, okay? Her LLC gross revenue is, let's say, 100,000 per year. She believed that since the LLC was registered in the US and our clients were US based, she only had to worry about US taxes. She even paid her US self-employment taxes through the LLC. Now, here's where the Italian tax system steps in. Sara is considered an Italian tax resident because she spends more than 103 days a year, has her center of interest here in Italy, and she is registered a resident in Florence to the municipality, to the Anagrafe. Even though her LLC US-based, Italy now applies what's called the Control Foreign Company, or CFC rules, following the name of the Permanent Establishment Test for companies. Because Sara is the sole owner and manager of the LLC, and she is physically performing and managing all the work for the LLC from Italy. So the Italian tax authorities will likely consider the US LLC to have a permanent establishment in Italy. So in simple terms, in other words, Italy sees that the brain and the muscle of the US company are right here on Italian soil, thanks to Sara. This means that Sara's US LLC in this case, despite it's an American registration, American entity, is now considered by the Italian laws to be an Italian company for tax purposes. And guess what? Italy wants its fair share. So how does this translate into numbers for Sara? Well, let's say her LLC generates 100,000 in revenues. Let's say business expenses are 20,000, net profit 80,000. Now, in Italy, let's say IRES income taxes, let's say 24%. So on 80,000, that's 19,200 for corporate tax. But wait, there's more. Since Sara is the owner and the profits are considered paid to her, she's also have to face personal income taxes, IRPEF, on that 80,000. So depending on her total income, this could be progressive rates from 23 to 43%, leading the tax bill to 28,000. And this is without even mentioning potential penalties from not declaring this income correctly, which can be very, very high. Sara, back in time, thought she was avoiding Italian taxes, but actually, she created a significant tax liability plus penalties because she was not aware of Italy and all the European countries, by the way, treat foreign companies managed by local residents. Now, let's pick another example. Let's say Marco. Marco is an Italian citizen who lived in London for many years, where he set up a successful UK or US business, okay? He recently declared to move back to his hometown in Verona, Milan, wherever you pick. But he keeps on running his e-commerce business completely online, handling everything from customer service to marketing, product sources from Italy. Marco, like Sara, believed that because his company is US based and his customers were mostly international, no one of the clients here in Italy, he wouldn't face Italian taxes on his business profits. Similar to Casa's case, because Marco is an Italian tax resident and is the sole director of manager of this US LLC, is physically running the entire operation from Italy, the Italian tax authorities, by assumption, according to the CFC rules, would consider his LLC limited company to have a permanent establishment in Italy. And that, translating to numbers, let's say the net profit was 150,000, that means that she or he in this case has to pay something like 60,000. That's a pretty nice hit. Again, this is just a simplified estimate, okay? Just a pure example, not including any potential social security contributions, which could also be substantial, or the hefty penalties for non-compliance, ending up to 120% for unpaid taxes. Marco's choice of a limited company abroad, made with good intentions for simplicity, of course, has turned into a serious financial exposure because he didn't understand the Italian perspective on foreign companies operated by the Italian residents. So, what's the takeaway here from Marco and Sala's examples? It's crucial to understand that simply having your company sitting and running in another country like in the US, UK, whatever, does not automatically shield its profits from international taxation, from the Italian taxation, as the controlling mind and brain and body of the company are an Italian tax resident and operating and managing the business remotely from Italy. The Italian tax system is designed to tax economic activities that take place within the Italian territory, regardless of where the company on paper is legally registered. And this concept of permanent establishment is a cornerstone for international tax laws. And in Italy, like many other countries, they do apply that. We know this can sound very annoying, especially when you're trying to navigate a new country and the complexity of the tax rules. So what can you do? Well, first and foremost, if you are an expat living in Italy and you own a foreign company, an LLC or something, when you are the sole proprietor or the head of the company, it's essential for you to get professional advice. Do not assume anything. Do not assume that your current structure is compliant here in Italy. There are solutions, there are ways to structure your affairs legally and efficiently in Italy, but it requires understanding these specific rules, and there is no one-fits-all solution. Every case is different. Perhaps you might need to convert your foreign entity into an Italian one, or see if there are some specific beneficial tax regimes for new residents if you qualify, which might change how your income is taxed a little bit. The key is to address this before the Italian tax authorities come knocking. If you're currently living in Italy or planning to move here and you have a LLC in the US, in the UK, or any other foreign company, we want you to take this information seriously. Don't let your dream of living in Italy turn into a tax nightmare. Take action, get informed, protect your finances.
At Studio Rigo, we provide world-class tax and financial guidance for expats and international professionals in Italy. We don't just help you stay compliant. We craft strategic tax solutions tailored to high-level individuals who demand precision and expertise. If you are serious about optimizing your tax position, visit our website or connect with us on social media. We work with those who value excellence, and we look forward to assisting you. Thank you for watching. See you in the next video.